Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock and let's figure out what is happening to the stock and well, what we can expect moving forward. So as usual, if you enjoyed, don't forget to hit that like button as it does help a lot. This is not financial advice and I am not a financial advisor. And of course, my membership section is live. The link is down below. For just $2.99 a month, you get access to all my intraday thoughts, posts, updates, technical analysis, options flow updates, everything on Tesla. Every day, the market is trading live throughout the trading day, constantly, again, for just $3 a month. If you're interested, the link is down below. But jumping into a Tesla, closing the day down almost 2%, we'll say, on the day, closing at just above $170 per share, which of course is, well, compared to the market, going to be a bit of an underperformance, with the market being up, for instance, QQQ, about 0.7% and SPY pretty flat. So what does this mean? Well, Tesla has officially, left this consolidation area that we've been waiting for patiently for quite some time. And, for the longest time, I've been saying I am slightly more bearish leaning, but, I was ever so slightly, like I wasn't like insanely more bearish. It's just if I had to pick a direction, I kept saying I pick bearish. But, obviously it's always nice to wait and see for confirmation, right? And there were still signs pointing for potential, movement in the upwards, like the market bias, for instance, right? We're showing that potentially we're moving upwards, etc. So, it was definitely up in the air, in my opinion. It wasn't very convincing one way or the other, but we did officially at least so far seemingly pick a direction. And I say seemingly because, well, there's a few caveats that I personally have that I'll talk about throughout this video. So let's talk about the facts first. First and foremost, we did break below. We finally broke below this 173 level. And not only did we break below it, we closed below it. And we closed, of course, below the 50-day moving average. So definitely some bearish signs coming out here right now and some weakness for the stock. And as I told my members this morning, somewhere down here, we did essentially bounce right off of, I think it was here, yeah. We did bounce essentially right off of my 168 to 170 level. I've been talking about many times, if we lose 173, we most likely come down to 168, 170. If we lose that, then we most likely excuse me, come down to the next region, which is going to be pretty much 160 to 163. Well, we obviously came down to that first target I've been talking about for quite some time as one of the downside targets, 168 to 160, almost to perfection. We bounced, which was that pivot point down over here after this massive rally, mini correction, when we continue rallying back up, right? Well, we touched that place once again and we bounced okay off of it, right? So, there is a sign that this is that, that place to bounce. Now, obviously, overall, the trend here, very short term, has been a bit damaged. The bullish trend at least has been slightly damaged here because we lost this area. We lost this 50-day moving average and we lost this 173 level, even though we did bounce here decently well. It still shows signs of weakness, right? It still shows signs of weakness. Now, again, like I said, if we lose this region right here, 168 to 170, we expect 160 to 163 next. Now, what does this mean moving forward? So naturally, what this means is, well, the 50-day moving average, which is currently sitting at about 172, and just this really 173 level that has been supporting us for quite some time now, for like literally weeks. Over here, you can see as I zoom in, well, naturally, at least in theory, it should turn into now a pretty powerful, most likely, resistance, because this area acts as a pretty powerful support. Naturally, the opposite should, in theory, now be true, right? Now, remember when I said there's a few caveats? Well, here's probably the biggest one, and probably the main one, really. This could still be a bear trap. Why could this still be a bear trap? Now, I personally have a rule. Whenever any stock really, but in this case Tesla, breaks above or below a certain very important crucial threshold level, I want to see that maintained. So in this case, because we broke below my crucial 173 level I talked about, the downtrend obviously persisted. But what I want to see now for the bearish trend to kind of solidify itself, if that makes sense, and grow more strength, if you will, I want to see a continued hold below 173, right? And I usually have a 2 to 3 day rule. If Tesla can hold and not regain and recapture 173 pretty much in 2 to 3 days from now, well, that most likely solidifies that bearish trend, and it increases the probabilities even further that we come down to 160 to 163. That's just the way I look at it, because again, there are traps in the market. It's a very, common thing to get, well, bullish and bearish traps. That's just the thing. This is my kind of little mini rule that tries to minimize the risk of that, you know what I mean, of getting caught by one of these traps. So again, if we cannot regain 173 within the next 2 to 3 days, that to me solidifies it even further, that we potentially may even come down to 160 to 163. But, and this is the other caveat, what is in 2 to 3 days? What is there an event in 2 to 3 days that someone can, let me know? Well, there's two, arguably. Tomorrow we have CPI data. And obviously on Thursday, we have probably the most important event for Tesla, and the next, couple months until robotaxi events, we have the shareholder event with the vote compensation and all that stuff coming into play. And that's going to be really important to see how that goes and how the stock really reacts to it as well. And if there's anything that can make this a potential bear trap and we just rally back up and regain the mid 70s, we'll say 170s, it's that. So those are the caveats. So that's why I wouldn't, claim victory for the bears just yet. They are definitely getting the upper hand here, but I wouldn't count I wouldn't count on it being all over just yet for the bulls. There is still a chance for this to be a bear trap. And that's the main way I'll be looking at it. But again, 173, crucial level to regain for Tesla, or at the very least regaining the 50-day moving average, which is pretty much sitting at 172. And that's the thing I've been talking about. Remember also yesterday when I was talking about options flow, I mentioned how there's that 2 million put order coming in, expiring this Friday. Remember how I also said, if this whale believes that Tesla is going to tank post investor day, there's no reason to buy it. I think it was also above the ask today, which was Monday, of course, today as in Monday. There's no reason to buy that early, right? So clearly they expect to move going into the events, and that's exactly what happened. It clearly was today. It could have been tomorrow, but it was obviously today, right? And even if they took profit on this massive move, that they're probably up a damn respectable amount, like probably a respectable like 20-30% already. Honestly, I wouldn't be surprised if they are. So take it for, for what it's worth. Now, in terms of other options flow, we had some calls, some puts sold, nothing really crazy. I think the most craziest one, I guess, is this 1.1 million 250 call sold, but it's 2 years out, right? June 18th, 2026. Other than that, I didn't really see too crazy things. There was $1 million one here, but it wasn't that alarming. 1.3 million over here above the ask. It's for this week, but it's a 195 strike, so it's very in the money. So not super alarming, I guess, in my opinion at least, mainly because it's just so ridiculously in the money. So it kind of cancels out the fact that it's a high premium, at least in my opinion. It is a weekly though, so that is something to note. It is a weekly, but not really sure how I feel about that one, honestly. And it did come in today at 1 p.m. pretty much. So I don't know. I'm not sure how I feel about that. But the way I look at it is Tesla definitely showing some signs of weakness, definitely starting to increase the probabilities of 160 to 163. It's just now, well, do we regain 173 or do we lose 168 next? That's the question. And now that's the next kind of consolidation range to watch out for. Again, below 168, we see 160, 163. Above 173, it's a bear trap. And we most likely begin our way back up, which could happen after the shareholder event. In terms of the actual things here like MACD and whatnot, right? MACD still looking bearish. RSI potentially maybe making a hidden bullish divergence. That is a possibility. Stochastic, obviously, still kind of bearish looking, right? On the weekly chart, you can see here, right, we have the MACD. You can see arguably flipped bullish still, not arguably, literally flipped bullish here, but the MACD or stochastic is definitely starting to lose momentum. As you can see, it's curling back down. Like I said before, that it looks like it's about to, and it's on the verge of crossing bearish as well. So I wouldn't say the bulls are out of the woodworks yet, but I wouldn't say the bears should celebrate too early just yet either, because this still could be a bear trap. And it really comes down to the shareholder event, and that's what I'd be personally waiting for, IMO. So all that being said and done, thank you so much for watching. Ladies and gentlemen, if you did enjoy this video, if you found it useful, whatever, helpful, don't forget to hit that like button, as it will help a lot. But yeah, thank you so much for watching. And as usual, I will see you for the next one. Peace.